Hi, this is Mike Palmer with Group 1 Trading. This is Volatility 411. Now we have the VIX in the low 20s. So after a really quiet couple weeks there, all it takes is some China news and all of a sudden we are down. The S&P 500 was down as much as 55 points today, which led to a VIX in about 22. Since then, we've seen the market rally back. We're only down about 25 in the S&P 500 as of this taping. That means the VIX is pulled back. It's at 20 right now. Just a recent trade, we saw a big seller of some back month volatility. They sold both June and July options. They sold them right around in the 20 range, so a little bit kind of basically at the money options, but a little bit out of the money too in June and July, and they bought May options with that spread. That was about 60,000 contracts they sold in the back months, and they bought calls in the front months. This is someone who thinks that the volatility is going to continue in May. This we're seeing across a lot of options. Options are generally bid in the near term. Another big trade also we're seeing, and this is typical of when we have big sell-offs in the market, big rise in the VIX, we're seeing buyers of 1x2 put spreads. That's they buy something like the 16 puts and sell 2 of the 14 puts. The cash outlay winds up being pretty small because they're selling 2 of the 14 puts with volatility elevated for buying the 16s, and that pays off should the markets quiet down and the VIX move back to a lower level. And it doesn't have that much of a cash outlay, so you don't lose much money if that does not happen. You have a big risk if the VIX really craters down to 12, but that doesn't seem to be something that's on the table right now with the VIX in the low 20s. So that's what's going on here in the VIX. This is Mike Palmer with Group 1 Trading, and this is Volatility 411.